Let me show you something that is going to completely change the way you think about trading. Most people, and I mean the vast majority of retail traders sitting at their screens right now, believe that to make money in this market, you need to win most of your trades. They think a good trader is someone who is right 70%, 80%, maybe even 90% of the time. And because they believe that, they do something absolutely destructive. They cut their winners short to lock in small profits, and they hold their losers hoping the market comes back, because they cannot stand the idea of being wrong. They would rather watch a trade bleed out slowly than take the loss and admit the setup failed. That psychology, that obsession with being right, is the single biggest reason most retail traders never make consistent money. So let me show you the math that flips this entire thing on its head. Because here is the truth that professional traders, funded traders, and institutional desks all understand. You do not need to win most of your trades to be profitable. You do not even need to win half. You can lose 6 trades out of every 10, be wrong more than you are right, and still end the month in profit. And it is not luck. It is not a trick. It is pure, undeniable mathematics. And once you see it, you cannot unsee it. Here is the math laid out as simply as possible, and I want you to actually follow these numbers because this is where most traders have their first real breakthrough. Imagine you take 10 trades. Each trade risks exactly $100. That is your stop loss, your maximum loss per trade. Your take profit is set at $200 every single time, meaning your risk to reward ratio is 1 to 2. You risk $1 to make 2. Now out of those 10 trades, you only win 4 of them. You lose 6. Most traders would look at that record and call it a failure. 40% win rate sounds terrible to someone who thinks winning means being right. But run the numbers. 6 losing trades at $100 each is $600 lost. For winning trades at $200 each is $800 gained. You lost 6 trades. You were wrong 60% of the time, and you still made $200 net profit on the month. Now scale that up. Same 40% win rate, same 1 to 2 risk reward, but now you are risking $500 per trade instead of $100. 6 losses are $3,000 down. 4 wins is $4,000 up. You net $1,000 from a strategy that loses more than it wins. That is not theory. That is arithmetic. And the market does not care about your feelings or your win rate. It only cares about whether your average winner is bigger than your average loser. That is the entire game. Now let me push this even further because the numbers get even more powerful when you extend the risk-reward ratio. Let's say instead of 1 to 2, you set your take profit at 3 times your stop loss, a 1 to 3 risk reward. Same 10 trades. You only win 3 out of 10. 30% win rate. That sounds like you should quit trading immediately. 7 losses at $100 is $700 down. 3 wins at $300 is $900 up. You are still profitable by $200 with a 30% win rate. And this is why when you see a funded trader or a professional say they only win 30 or 40% of their trades, they are not embarrassed by it. They are not hiding something. They have simply understood what most retail traders never figure out. That win rate alone means absolutely nothing. What matters is the relationship between how much you make when you are right and how much you lose when you are wrong. A trader with a 90% win rate who risks $500 to make $50 is a disaster waiting to happen. One bad trade wipe out 9 winners. Meanwhile, a trader with a 40% win rate and a 1 to 3 risk reward is quietly building an account every single week. The math does not lie. The math has never lied. The question is whether you are willing to restructure the way you trade to let the math work in your favor. Here is how you actually apply this in real trading, because understanding the concept is one thing. Executing it under pressure is another. The biggest challenge is not calculating the risk-reward before you enter. That part is easy. The challenge is not moving your stop loss when the trade goes against you and not closing your winner early when it is halfway to target and you start getting nervous. Both of those behaviors destroy the math in real time.